Hi everyone. Before I start this video, make sure that you're a part of my Discord server by joining the link in the description box below. And in this video, we'll be going over A-Level Accounting 2024 October-November Paper 3-2 question number 2. This is a structured paper 3 which consists of 3 questions. Each of them will be of 25 marks and the total time limit for this paper is 1 hour and 30 minutes. So ideally, you should be spending about 30 minutes in order to solve each question. And in this video as well, we'll be attempting to solve this question number 2 under 30 minutes. So without any further delay, let's get started. Amina and Belinda had been in partnership for some years, sharing profits and losses equally after allowing for interest on capital. Their financial year end was 31st December. So in this case, they only allow interest on capital. There is no interest on drawings. There is no salary. On 1st July 2023, Nigel was admitted as a partner. From then on, profits and losses were shared equally between the 3 partners and the rate of interest on capital was unchanged. Profit for the year ended 31st December 2023 was 124,000. So for the first half of the year 2023, we only had 2 partners, Amina and Belinda, who shared the profits equally. Then for the second half of the year 2023, there were 3 partners. And now the 3 partners will have to share the profits and losses equally. The partnership's accountant divided the profit evenly between the 6-month period ended 30 June 2023 and the 6-month period ended 31st December 2023 and produced the capital accounts and current accounts for the year. We have been given the capital accounts. We also have the current accounts. Okay. Amina realized that the accountant had not correctly taken the following into account when dividing the annual profit between the 2 6-month periods. An irrecoverable debt of 13,000 had been written off in December 2023 after a major customer went out of business. This debt related to sales made in August 2023. Okay, let us first look at our question. We need to calculate the correct division of profit between the 2 periods. Assume that revenue and other expenses accrued evenly throughout the year. Okay, so we are assuming that the expenses and revenue incurred evenly throughout the year. Then a significant acquisition of new non-current assets was made on 1st July 2023 when 50,000 of Nigel's capital contribution was spent on new equipment. It is the policy of the partnership to depreciate equipment using the straight line method at the rate of 20% per annum, calculated on a monthly basis. So in this case, we know that Nigel was introduced for the second half of the year, which is for 6 months. It also means that the depreciation on this 50,000 worth of the new equipment should also be made for 6 months. So depreciation is just going to be our cost of 50,000 multiplied by the rate of 20%. But this will give the depreciation for an entire year. But we only need the depreciation for the second half of the year. That's why we multiply it by 6 and divide it by 12. This will give us the depreciation charge of 5,000. So we need to account for 2 different things. The first one is the irrecoverable debt of 13,000 and the second one is for the irrecoverable debt of 5,000. In this case, remember that this 13,000 is the debt related to sales made in August 2023, which is the second half of the year, which means that this should be accounted for after Nigel has been introduced as a partner. And so is the case with this depreciation of 5,000. This also occurs in the second half of the year. Alright, let's start with our profit. So the initial profit was 124,000, but for the first half of the year, the 18,000 expenses has not yet been incurred, which means that the profit for the first half of the year, so profit for January to June will be 124,000. But this 124,000 has already subtracted the 18,000 relating to the irrecoverable debt for the second half of the year and the depreciation again related to the second half of the year. So it should not be included for the first half. That's why the expenses were previously subtracted. Now we include it back by adding it. So we add the 18,000, that's 13,000 plus 5,000, and we only require it for 6 months. So times 6 out of 12. This gives the profit for the first 6 months of the year to be 71,000. Now for profit for July to December, that will be 124,000. But in this case, now we need to subtract the entire 18,000 from this profit. So we subtract the 18,000 here and then multiply it by again 6 out of 12. which results in the value of 53,000. Again, you might get confused, but the total profit is still the same. That is 71,000 plus 53. So 71,000 plus 53,000 still results in 124,000. So there is no change in the total profit. The only thing that we are changing is now we are allocating the expenses of the 18,000 to the second half of the year instead of the first half of the year. That's why we added the expenses for the first half and subtracted the expenses for the second half. That is all for the first part. Let's move towards the next one. Goodwill on 1st July 2023 was valued at 114,000 and was not retained in the books of accounts. We need to make adjustment for goodwill whenever a new partner is introduced into a business. That is why we now need to prepare the corrected capital accounts for the year. Let's start with the opening balance. Since we're talking about capital, the opening balance will always be on the credit side. So balance brought down. Let's take a look above. So that's 60,000 for Amina and 60,000 for Belinda. So 60,000 here, 60,000 here. Then let's include the capital introduced by Nigel. We can see that Nigel introduced cash to the bank account worth 80,000. Let's write it down. So bank, 80,000. Now adjustment of goodwill is quite simple. We include it based on two different ratios. The ratio before the inclusion of a new partner and the ratio after the inclusion of a new partner. So goodwill based on old ratio will always be included on the credit side, and the goodwill based on the new ratio will always be included on the debit side. So old ratio included only two partners, Amina and Belinda. So we just need to divide this goodwill of 114,000 equally among two partners. So that's 114,000 divided by 2, which results in the value of 57,000. So 57,000 for Amina and 57,000 for Belinda. Now the new ratio is that we need to divide 140,000 equally but among three partners. So 114,000 divided by 3, which results in the value of 38,000. So 38,000 for Amina, 38,000 for Belinda, and 38,000 for Nigel. That is all for our goodwill adjustment. Now we can figure out the closing balance. For this, we need the total from the credit side. So 60,000 plus 57,000 will result in 117,000. That's the same for Belinda as well. For Nigel, it's just 80,000. Now the total will be the same on the debit side as well. So 117,000, 117,000, and 80,000. Okay, the closing balance for Amina will be 117,000 minus 38,000, which results in 79,000. That's the same for Belinda. And for Nigel, that will be 80,000 minus 38,000, which is 42,000. Now we need to bring the closing balance to the opposite side as the opening balance for the next period. So balance BD, that will be 79,000 for Amina, 79,000 for Belinda, and 42,000 for Nigel. In this case, we can clearly see that for Amina and Belinda, the capital balances have increased, whereas for Nigel, the capital balance has decreased. This is due to the adjustment of goodwill. Since Nigel is now buying in the profit of an already established partnership business, he is paying for the effort that Amina and Belinda put into establishing that partnership as a successful business, so that he can reap the benefits of the goodwill that already exists of the business. That's why Nigel's capital will now decrease, and he is essentially paying to get a profit from this partnership business to Amina and Belinda. That is just the adjustment of goodwill. That's all for this part. Let's move towards the next one. Now we need to prepare the corrected current accounts for the year. Okay, for the current account, we need to check if the opening balance is on the debit side or the credit side. We can see that Belinda has a debit balance of 1100 and Amina has a credit balance of 4900. So balance BD on the debit side for Belinda 1100, balance BD on the credit side for Amina for 4900. The debit balance means that Belinda will have to pay 1100 into the partnership, whereas the credit balance means that Amina is yet to receive 4900 from the partnership. Now, the first thing we need to include will be the interest on capital. So interest on capital does not depend on the profit, and we have changed the profit, but the capital will still remain the same for the first half, because for the first half there was no inclusion of Nigel. It means that both Amina and Belinda will still have the capital balance of 60,000 each. So the rate of interest on capital will be 1500 out of 60,000 times 100, which is 2.5%. So for the first half, it will be 1500 each for Amina and Belinda. Let's write it down. So interest on capital. This is the first period. 1500 Amina, 1500 Belinda. Now let's calculate the interest on capital for the second period, based on the new capital balances, which is after the introduction of Nigel. Now for the second half of the year, we take these capital balances. So for Amina and Belinda, that will be 79,000 times the rate of interest, which is 2.5%. That will result in 1975. And for Nigel, that will be 42,000 times 2.5%, which results in 1050. So 1975, 1975 and 1050. Okay, we are done with the interest on capital. Now we need to calculate the share of profit. So share of profit for the first period and share of profit for the second period. Now we've already calculated the profit for the year for the first half and the second half. In order to calculate the share of profit, we just need to remove the interest on capital. So the interest on capital for the first half is 1500 plus 1500. Let's take a look above. So the profit was 71,000. So 71,000 minus 1500 minus 1500 will give us our residual profit for the first half, which is 68,000. And during the first half, there are only two partners, so we just need to divide 68,000 equally among two partners. So 68,000 by 2, this will result in 34,000 each. Let's write it down. So 34,000 for Amina, 34,000 for Belinda. Now we repeat the same process for the second half. For the second half, the interest on capital is 1975, 1975 and 1050. And we have the profit to be 53,000. So 53,000 minus 1975 minus 1975 minus 1050 will give us the residual profit, which is 48,000. And in this case, we have three partners, so we need to divide this residual profit equally among the three partners. So we just divide 48,000 by 3, which results in the value of 16,000. Let's write it down. So 16,000 for Amina, 16,000 for Belinda and 16,000 for Nigel. Okay, then let's see, do we have any drawings? Okay, we haven't given the drawings right here. There will be no changes to drawings. We can just copy down the same amount. 38,500, 47,100, 18,200. And in this case, there is no interest on drawings, so we do not have to adjust it. So drawings on the debit side, that will be 38,500, then 47,100 and 18,200. We have calculated everything. Now we just need to calculate our closing balance, and we need to check which side is heavier. For Nigel, debit side is higher, whereas for Amina and Belinda, credit sides are higher. So for Amina and Belinda, the closing balance, balance CD, will be on the debit side, whereas for Nigel, the closing balance will be on the credit side. Okay, let's calculate it first for Amina and Belinda. For that, we need to calculate the total from the credit side. So 4,900 plus 1,500 plus 1,975 plus 34,000 plus 16,000 will result in the value of 58,375. And the closing balance will be 58,375 minus 38,500, which results in 19,875. We repeat the same process for Belinda. The total from the credit side will be 1,500 plus 1975 plus 34,000 plus 16,000, which results in 53,475. Now for the closing balance, that will be 53,475 minus 47,100 minus 1,100, which results in the value of 5,275. For Nigel, the debit side is higher, so the total will just be 18,200. And the closing balance will be 18,200 minus 16,000 minus 1,050, which results in 1,150. Now we need to bring the closing balance as the opening balance for the next period on the opposite sides. Okay, these balances will go towards the credit side. So that's 19,875, 5,275. And this balance will go towards the credit side, so 1,150. It means that during the starting of the next period, Nigel owes 1,150 to the partnership, whereas the partnership owes 19,875 to Amina and 5,275 to Belinda. That is all for the current account. Let's move towards the next part. Oh, we haven't given the working section as well. So instead of doing all of your workings here, you need to show these workings within that particular box so that you get your markings correctly. You need to show the working for your rate of interest as well. Okay, now we have additional information. The accountant has been the partnership's accountant since it was originally started. However, since noticing his errors, Amina is now wondering if the partnership should appoint a new accountant. She has also discovered that Nigel's wife is the current accountant's sister. Okay, we need to advise the partners whether or not they should appoint a new accountant by justifying our answer. This is a 5 marks. So we need to have 4 comments and 1 final decision. The first thing is that the current accountant, Piotr, is already familiar with the workings and the accounts of the partnership. Let's write it down. Piotr is already familiar with the workings and accounts of the partnership. The second thing we can say is that since he has been working as an accountant for the partnership for a long time, Piotr may have a good working relationship with the partners. So Piotr may have good working relations with the partners. Now, the major issue here is that Piotr might have a conflict of interest or become biased towards Nigel because he has some sort of relation with Nigel as well. He's essentially a brother-in-law, so he might favor Nigel. That's why he might have messed up the books of accounts knowingly so that Nigel would get a higher share of the profit. Let's write it down. Piotr may have conflict of interest. And in this case, if Piotr knowingly made those errors, then he has definitely infringed the principles of integrity as well as professional behavior. Let's write it down. If he deliberately made those mistakes, then he has infringed the principles of integrity and professional behavior. Now, based on these factors, we need to advise the partners whether or not they should appoint a new accountant. I would suggest the partners to appoint a new accountant in order to avoid any biasness in the future as well. Let's write down the decision. The partners should appoint a new accountant in order to avoid any biasness and conflict of interest in the future. Alright, that is all for this entire question. If you found this video useful, then make sure that you like the video and leave a comment below, and make sure you're subscribed to the channel and hit the bell icon so that you do not miss any of these videos in the future. Thank you.